Hi, this is Zak Mir with the Bulletin Board Heroes here at Zaks Traders Cafe, one of the finest stock market rundowns around, and we're starting off with the FTSE 100, which has bounced off the floor of that rising trend channel again, the area around 82.30. End of day close below that. We're looking at September support 81.65, but at the moment we've got the RSI above neutral 50 at 53. We haven't yet broken the resistance line, which would be the trigger on a new move to the upside, and we haven't obviously broken the resistance line there on the chart from May around 83.60. So end of day close above that is what we're looking for to give us 86.60 in the top of the channel and avoid a potential test of the 200-day moving average areas we had back in August and back in February. Moving on to the DAX, and this has been in fine form of late, but current situation is consolidating above the old resistance, 19,000, while we're above that and above the floor of the latest gap from last week. Feeling quite confident that we can hit the top of that rising trend channel from this time last year as high as 20,100 by the end of October. So a pretty strong position there still, even though we pulled back a little. Moving on to the Dow, and here also a market stretching higher in the recent past, finding support near the old support of the last couple of weeks, 41,800. Below that, 41,500, probably the worst that we're expecting at the moment, ahead of a move up towards the top of that channel from this time last year as high as 43,200. So maybe a little bit to go there, even though we've got bearish divergence in the RSI window, so that does suggest maybe the first move here is towards 41,500 rather than to the top of the channel. The next market is Bitcoin, and here position has been rather frustrating, continues to be frustrating in the sense that we didn't manage to get through 67,600, which is the top of that falling trend channel. We've had to test the 50-day line, which was what we didn't want to do, 60,300, but at least we bounced off that rising feature and have another chance perhaps of breaking 67,000 plus. On the downside, if we do break down, then we still have the threat of a move to the floor of the channel there, just below 52,000. RSI just below neutral 50, so that is a slight indicator of a potential move maybe up to the, or down to the upper 50,000s. Gold is next, and here we were cooling off a bit the last time we looked, but we've bounced back again, back to the top of the channel there, around 26.90. That was our old target above 26.90, looking for an acceleration or a steeper progression there up to as high as 28.80 at the top of that rising trend channel from the end of June. That 28.80 level, maybe by the end of next month, valid while we hold above the mid-September resistance at 26.20. Moving on to the stocks, and happy to see that Capital Metals has done what we were hoping it would do, which was to stay above the 1.5 pence area and then rally back to the old support zone, which was 2.5 pence, which is managed to do in 2 days, which is quite incredible. Next level up is the 200-day line there at 3.1 pence, but we're probably looking for the June resistance on the way down as high as 4 pence plus by the end of this month, if everything goes well. Ideally, we stay above yesterday's high around the 2.2 pence area on an end-of-day close basis. Next stock is one which has certainly been in the wars and even lost its CFO, but contract news today sort of brightened the picture a bit for Celadon. We've had the double bottom, triple bottom towards 21 pence, and hoping that today's gap higher could at least take us up to the 50-day line while there's no end-of-day close back below the floor of the gap there at 28 pence, but that looks like it may be a bit optimistic. On to Helium One, and here the picture is that we've had a failure at the 50 and 200-day moving averages, which is obviously rather disappointing. The trigger for any fresh move to the upside would be an end-of-day close above the 50-day line. At the moment, just in a range between a penny and basically 1.3 pence, but just interesting that we failed there when we were hoping that we would not. Moving on to one of the stocks of the last month or so, which is Mobile Streams, and You can see that it is the gift that keeps on giving, even more than maybe the current situation of the Labour Party. We've got the shares breaking above 0.24. The next target there was 0.33. And I suppose it won't be long before we can even pencil in 0.5 pence, which was 2022 resistance. But let's go for 0.33 now, which is basically resistance on the way down back in the autumn of 2022. Upside valid while we hold above 0.24. What a amazing run that stock has had, and I think we're probably up to 400% rise on the year to date, so full marks to that company. Moving on to Parkmead, which is obviously not going to be quite as exciting as mobile streams, but we have broken above the 50-day line there at 11 pence, and looking for the 200-day moving average, 14.5 pence maybe by the end of this month. The main thing here, I suppose, is to get back above the old broken support there at 12 pence as quickly as possible and stay above 10 pence, which is recent support. Moving on to one of the more exciting situations on the market, Premier African, there's never a dull moment here, and here we've just had the first glimmer that we're going to bounce off a support line projection there from back in, back at the beginning of the year. That has happened, and we're looking for at least the 50-day line there at 0.06 pence. Even if the shares fail after that, you can see the best case scenario there is up to 0.08, but in the recent past, the 50-day line has been the block on the price action. On to Roadside, which I interviewed, or who I interviewed yesterday. Here the shares are still edging up, and this beautiful step fashion that we've got here, almost basically one of the strongest forms of charting price action. Top of the channel there, as high as 31 pence, which we're looking for by the end of this month, while we remain above the floor of the channel there at 19 pence, which seems quite doable at the moment. Big win yesterday for Tavistock, and the shares doing what we were hoping they would do, which is holding the gap, and then ideally heading up to the top of that, that resistance line projection there from back in March. I suppose that is the top of a triangle that we've had in place since then, and so above 3 pence, looking for 5.5. Ideally by the end of this month on Tavistock. The news has been good enough. On to Valereum, which has been signalled here as a buy quite a long time. We broke that red resistance line there from March around 4.3 pence. We were looking for 8 pence after that, and now that we've achieved 8 pence, above 8 pence, we're looking for the upper parallel of that triangle from December as high as 12 pence. By the end of this month, or even much sooner. The other added sizzle at the moment is the way that we've got the 50 and 200-day lines both rising. That's heading into a golden cross, which tends to be the strongest part of the cycle, and hopefully the cross will happen in the next couple of weeks. Finishing off with Westminster Group, and here you see that we've got a rising trend channel that's been in place since basically the beginning of the year. Top of the channel there at 3.4 pence, and the shares gapping up today, looking for 3.4 pence by the end of next month, while we remain above the previous resistance around 2 pence, above 2, looking for 3.5 on Westminster Group. That's it from me today. More updates tomorrow.